Hello everyone, today is the 16th of July 2021. We are into the last trading day of the week. So in this video, we will be running you through our 5 most focused markets. So we have the Euro US dollar, the gold, Nasdaq, US oil, and Bitcoin. Now of course, we are going to talk about the dollar index as well. Alright, so let's kick off with the dollar index. And so right here we can see that the price is still facing a lot of resistance at the top of this range, or a symmetrical triangle if you will. And of course we are also seeing that it is kind of channeling out of this range, and we just don't see enough seller coming in, and it somehow seems that the dollar just keep getting more buyers, and therefore what you can see right here is that highs and lows are getting higher as well. But in any case, if let's say the price is able to break higher and close right above with a strong bullish candle like this, then of course we are going to expect more upside for the dollar index, because end of the day, if we look at a much bigger time frame, we're actually trading at the lower portion of the entire market range. But however, because we are focused on what's happening right now, if the rejection becomes stronger and there's more seller, and then we see that the candle is able to break out of this channel strongly, and of course forming lower lows instead of higher lows, then we'll have more confidence to actually sell the dollar. But in any case, because the dollar is still at the top of the range, we will still look for selling opportunity for the dollar until we really see a breakout of this range. Now, before we move on, let's take a look at the Forex calendar. Yesterday, we have Federal Chairman Powell testifies again for the second time at 9:30 p.m. right here. And then just now we also have the Bank of Japan outlook reports. So let's take a look at those, right? So right here at Trading Economics, right, showing the Japan interest rate. I'm just going to go through with you right here. All right, the Bank of Japan left its key short-term interest rate unchanged, right, negative 0.1%, kept the targets for 10-year government bond yield at around 0%. In a quarterly outlook, the central bank slashed its projected rates of the GDP for the current financial year to 3.8% from 4%. However, it maintained its view the economy was headed for moderate recovery, revising up its growth forecast for the next financial year to 2.7% from 2.4% as vaccinations accelerate. The board revised sharply higher consumer inflation forecast for the financial year to 0.6% from earlier projection of 0.1%. That is a huge jump, right? Right, due to higher energy prices, of course, oil price has been climbing so much. And policymakers also released an outline of its new scheme aimed at boosting funding for activities against climate change, which will offer banks long-term loans at zero interest. This sounds like looking for an excuse, right? Climate change, so that they can offer banks long-term loans at 0%. But in any case, so as you can see, all right, from the outlook, all right, of the Bank of Japan, it does seem that inflation is here to stay. Monetary policies are going to be easy for a really long time. All right, so the market will still be filled with hot money and whatever you call it. So with that, let's take a look at what Jerome Powell has said in his last testimony. Federal Reserve emphasized commitment to low interest rate yesterday, move potentially big implication for investors. There is still a long way before hiking rates. That's a really dovish statement coming from the Fed chair himself. He added that unemployment remains elevated, inflation pressures should partially reverse. Central bank will keep buying assets until substantial further progress has been made toward our maximum employment and price stability goals. Powell also said current policy will continue to deliver powerful support to the economy until the recovery is complete. going downwards, right, you can actually take a look at this article which I posted in our free Telegram channel, right? Low rates can help technology, right? Such as those tech shares, tech stocks, which means to say that it's actually good for the Nasdaq if they were to hold rates low and continue with all the hot money. Low rates can hurt value stocks, right? Which means like the Dow Jones. Low rates can depress the dollar. Of course, if you keep on printing money in such a high volume, unprecedented level, of course you're gonna get a lower dollar, which is one of the very key reason why we are still bearish on the dollar, despite the fact that if you look at the entire chart, it is trading at the bottom range of the entire market range, right? And of course it talks about is inflation transitory. All right, so just have a read just have a look at this article and try to understand as much as you can. Alright, so we have actually spent quite a bit of time on those articles, but I think that it is actually very important for you to understand that the central banks are still trying to ease monetary policy. They are still printing lots of money to stimulate the economy, even though vaccination rollouts has been pretty smooth, but the transition is not that simple, and inflation is here to stay. Alright, I never believe that it is transitory at all. So that is something that you want to bear in mind, because that will have a huge impact on the market. So let's move on with the euro against the US dollar. Alright, so right here is daily time frame. Just like the dollar index, right now it is trading at the bottom of this entire range, or the symmetrical triangle. The thing is that we are starting to see that the price is starting to creep out of this falling channel, and if it does, alright, all we need is just one strong bullish candle that shoots all the way up, breaking all the highs right here, and then we can wait for pullback to buy again. Now going into the 4-hourly time frame, alright, so what we want to keep in mind is that the price is at the lower band of the entire range. Is at the lowest point already. There's rebound, alright, meaning there's buyers. And I just want to point out that if you pull out a Fibonacci from the swing low right here to the swing high, right now we are seeing the price being supported at the 61.8% level. So going to the 1-hourly time frame, the thing is that we do see support, but we do not yet see any buyers coming in, which means to say the price may go down a little bit further to look for more buyers, right? Like right here, you can obviously see that this area itself is a pretty important demand zone we have to look out for, right? Just right at the bottom of the entire range right here. So the thing is that you can try to buy right now, but just having a stop loss low right below the previous low, because at the end of the day, we are not sure if you'll go down further to retest a lower price, and so we want to be conservative if you were to buy right now. But I would say right now is definitely a good price to do so. At least we have supports, but just waiting for buyers to come in. Alright, but in any case, our trading plan, we want to see a little bit of dip, alright, and of course seeing a strong pullback or the rebound from there to enter the market. So therefore our trading plan will be to buy somewhere in between 61.8 and 78.6, right below the previous the current low right here. So I would say that it will be very close to 78.6%. that will be our main targets to enter. Of course, if the price started to go up, we might also enter the markets, right, before if it's not coming down. So if we were to follow this plan and to enter a trade right here, there will be 1.7092. Stop loss, of course, just right below the previous low, and our first target, right, will be all the way to somewhere right here. Why? Because if you were to pull out a trend line, which I don't think I have to really do that for you, it's very obvious, right? This area there might be some resistance, so that will be the very first take profit level, or instead, right, this will actually be our main target, and our first level will be somewhere here, because this area itself, as you can see, pretty important support before the price break lower. So there might be a little bit of supply right here. So this will be our first level, this will be our second level, and if the price is able to go even higher, alright, I would say all the way back to the previous high. And to be more conservative, let's just give it a little bit lower, and that will be our our final target for the Euro US dollar. All right, so that will be the trading plan for the Euro US dollar. So in the bigger time frame, if we look at the entire markets, of course we do know that the price is definitely trading at the lower portion of the entire market range. All right, we see decent rebound. All right, I think I went through this a lot of time. Very important demand zone. All right, because this is the previous double bottom. This is the neckline, price rebounded off. But to be honest, I really think that the rebound has been a little bit too shallow, and that really may cause a sudden sell-off in the gold price. But just keep that in mind for now. However, we want to focus on what's happening right now. If we go to the 4-hourly time frame, we are seeing that the price is rising within this channel, and right now we are seeing the price still coming down. Right, potentially it will come back to retest the previous high right here, and obviously right at this area there's much more or stronger demand, so there will be somewhere at 1818, right? But in any case, we are also seeing some support right here, so it really depends whether there's buyers coming in right now. If it does, of course we will expect the price to go higher, but if it came down even lower, then our main targets, all right, or our main entry price will be some right here at 1818, or I would say that between 1820 to 1818. And so this will be the trading plan, which is we'll be trying to buy somewhere right here 1818. Right, I think 1818 will be a pretty good price to do so. Stop loss will just have to be below, I would say below this bullish candle right here, below the low right here, and that will be about 1810. All right, the first take profit, of course we want to aim at the previous high, or possibly the neckline right here. Let's go into the 1-hourly time frame so we can get a clearer picture. All right, so as you can see right here, there's some sort of resistance. Main targets, all right, will be somewhere back to the previous high, and of course finally we want to go all the way to 1850, right at the somewhere slightly below the equilibrium level right here. So I think for the gold is really straightforward. All right, right now definitely we are still looking to buy, because very importantly it has broke out of this previous high, this entire range, right? And as I've said before, there isn't really much resistance within this area, right? So that's why we want to continue to look for buying opportunities. So just be patient and wait for that opportunity to come by. So that is the plan for the gold. Next, we have the Nasdaq. Right, so the Nasdaq has been rising within this rising channel, as you can see. Price has been kind of resisted, came down to the middle portion, and right now it went up a little bit more. But however, definitely yesterday we do see supports at this level. So if you look at the 4-hourly time frame, obviously previously it broke out of this consolidation, went up, came down back to the same demand zone, right at the breakout area, found supports, and right now we are seeing price is trying to climb higher. Definitely if we look at the 1-hourly time frame, we are now finally seeing higher lows and higher highs, but however it is still kind of shallow and slow as compared to the previous bearish wave right here. But that is how it is for the Nasdaq, or rather for US stock indices in general, which is the dip usually always looks like it's very strong, and the recovery always looks very slow. But at the end of the day, you'll see that the recovery will eventually outperform the dip, right? So as long as this structure keeps up, right, then we'll be able to see the price to continue to go even higher from here. And of course, with what we have just gone through about the testimony from Jerome Powell, the latest one, it is definitely a good news for the tech companies, and therefore good news for the Nasdaq, and therefore we will still remain bullish for the for Nasdaq itself. So as of now, you can see that the price is kind of breaking upwards a little bit out of this consolidation. So in fact, we already have given a trade call to buy Nasdaq, and so it is not too late to enter right now. The trading plan can be as straightforward as just buy right here, have a stop loss just right below the previous low, or you if want to be have a stop loss just right below the previous low right here. First take profit level, all right, coming back to somewhere right here. As you can see, there's a lot of buying and selling going on at about 14,900, and if the price goes even higher, our main targets will be back to the top of the entire channel. And of course, as usual, we can always point out the average volume as it trends, so that is pretty much the same. All right, so that is basically the trading plan for the Nasdaq. All right, straightforward, just buy, have a stop loss below previous low, aim for the top of the channel. All right, it's gonna keep on breaking higher. All right, moving on, we have the US oil. So for the US oil, the price dropped for the second day, and right now it is at a very important demand zone. As you can see, it's right very near to the bottom of this entire rising channel as well. So definitely there will be very strong support and strong demand to support the price. So into the 4-hour time frame, yes, we are now seeing a rebound coming in, and this could be a good chance to buy in right now and have a stop loss just below the current low right now. Right, so we're going to observe this for a little while, but we're going to give it to you right away. The trading plan, you can really look to buy right now. I'll explain it in a later bit. All right, stop loss just if you want to be really safe, all right, just below the 252 moving average. No, I don't think you have to. Just below the previous low will do, because if it doesn't, if it goes down, it'll go down a lot more. In any case, the first take profit level, right, just look at somewhere right here, right, because obviously there's a lot, this is an important level. We saw price being support and resisted a lot of times. Let me just draw it out for you to see. All right, so now you get it. Going upwards, all right, it may come back to this level. This is where the price breakout of this rising structure. This is where the price broke out, and so this area itself definitely will have very strong supply. But as a bonus, if the price were able to break higher, of course we can just look at it all the way back to the major equilibrium level. But of course that will be the so-called the bonus targets. But however, our main targets, right, will be somewhere right here will do. And the thing is that because right now the trend is actually bearish in the very smaller time frame, therefore we are only looking at a rebound that is about 150 pips, all right, from the swing low to the swing high, 150 to 170 pips, and that will be somewhere just right here. All right, essentially it's the first take profit level, because right now it is still kind of bearish, right, consolidating within this range. But in any case, there's definitely strong support coming from the bottom. I mean, this right now at this level is a very important level as well. Strong support, strong demand. So in any case, just take note of these few levels, and that will be the trading plan for the US oil. And last but not least, we have the Bitcoin. So the Bitcoin fell for another day. All right, it's just not able to find any buyers at all. In fact, I think we really got to look at it this way, that this is the range by itself and this is another range by itself. So we are not going to try to buy again, but rather we are just going to wait for it to dip, all right, to the bottom of this entire range. Then we may consider the buy. But otherwise, whenever the price pulls back, we are going to look for selling opportunity instead. I mean, if we look at the entire markets, I mean, based on the current trend, it's just a downtrend. Right now it's just consolidating. Highs are getting lower and lower. Even the lows are getting lower, although it looks just like ranging. So at the end of the day, I think it's inevitable that the Bitcoin will have to depreciate even further from here. Alright, so let's quickly talk about the trading plan, right? If we go into the 4-hourly time frame, alright, previously there was this consolidation, price break lower, pulls back, got resisted, came down again. All we need to do, there's two ways you can do it. To be honest, I still prefer buying, because end of the day we are still trading at a bottom range, right? That is just my principle. So our trading plan will still be waiting for a dip, right? This time we really want to wait for a dip, right? Something like this, right? Something like this, a dip. We want to see a dip because it does seems to us that price only rebounds after every dip, right? So if there's no dip and the price is just slowly coming down, then probably we won't be able to get enough buyers to actually go in. So we are again waiting for the same thing, probably a dip again, right within this region, 30,600 or 500, this area itself to buy. So to follow this methodology, right, we are just gonna set our entry somewhere at 30,500. Stop loss, alright, just stop loss, I think, and just set it right at the previous low right here. I will see you again during our weekly trading forecast.